Okay. Hi everyone, this is Manesh Patel. I'm the professional educator for Valetax. Today we're going to have a workshop on trading with pure price action. This is a workshop I really enjoy. And the reason why is when I started trading in 1996, as a retail trader, you go to the internet, you start doing searches. Back then there was not much internet, now there is. You start searching on how to trade, you'll get flooded with tons and tons of information, especially with a lot of indicators. This indicator is good, that indicator is good, and so forth. So as a beginning trader, you have a really hard time trying to figure out where to go and how to start. And really, this should be the place to start. Unfortunately, no one really teaches you this, but if you really did go through this at the very beginning of your trading career, then you will have a long, prosperous trading career with consistent profits. Because this is the foundation for technical trading, which most people don't even get. And this is one of the reasons why I'm excited to sit there and go through this with you guys, because no one really talks about this when they really should. Okay, just to go through, this is for our disclaimer, this is for education use only. We're not soliciting you buy or sell a particular instrument. All information is owned by Valetax, cannot be copied or distributed without our permission. Okay, a little about my background. Really don't need to know any of this, so we're just going to move past it, because really what I'm bringing to the table, the information I'm giving you, is really what matters. Who I am and all that really doesn't matter. And one of the things you should do, no matter who's speaking, is take the information we provide and then look at live charts, look at the historical charts, and validate everything we're talking about. So the information and content is really what matters at the end of the day. It really doesn't matter who I am, but later on, we're actually going to have a podcast. Valtex is starting. It's called Val Talk. The first one's going to be, I think, November 27th. I'll send more information in the Telegram chat room. That's where questions about my trading career and various other things are going to be asked, and it's going to be a lot of fun. Definitely invite you guys to participate in the Val Talk. It's a new series that Valtex is starting to kind of interview traders and kind of go through Q&A and stuff like that with us. Okay. But anyways, let's get back to this. Foundation. A trader must understand price action before you use any indicator. Okay. I know most people are using moving average indicators and everything. Some use RSI, some use MACDs, some start getting sophisticated into using Ichimoku and various other things. So one of the things you should do is understand price action before you even get into any indicators, because if you don't, you're solely dependent on the indicator, and at that point, you're going to be subject to all the games that are being played. Okay, and one of the things that we're going to show you today is how you could see where the games are being played in the market. It doesn't matter what instrument or time frame at all. You could clearly see everything in the charts. And we're going to come up with this concept called real bars versus fake bars. Fake bars are pretty much where the games are going to be played, and I'm going to show you how easily you could recognize them. Also, you could use this information to recognize tops and bottoms easily. So you could recognize a major top, a major bottom, or double tops, double bottoms, triple tops, and various other chart patterns that you may get involved with. Okay. Also, we're going to show you how, with real bars and fake bars, how to recognize the beginning of a trend. You're going to know when your trend's about to begin, when the trend's already existing, and so forth. And then lastly, it shows you momentum, which is the very essence of you being a consistent, profitable trader. Because if you take a trade without momentum on your side, you're really not going to sit there and go up huge. You'll get a little profit and then it'll reverse on you. So you need to make sure that you have momentum on your side in order for your price to get away from your entry. That way you can manage the trade. Okay. Now these are a lot of words, so let's get to everything here. So let's go for momentum. Let's talk about momentum. This is the key in trading probabilities, okay? If you see this QR code, this is to join our Telegram chat room. It's free. It's our trading room, and that's where all our announcements are. So let's go through and talk about pure price action. So when you look at a chart, you're going to see a bar. The bar has 4 pieces of information: the open, high, low, close, for both a bullish bar and bearish bar. Now, the color codes in your charting platform may be different. Sometimes a bullish bar is represented in blue, sometimes it's green, and so forth for the red. But all charting platforms pretty much will give you this information, which is the open, high, low, close. Okay. The key thing here to recognize that most people don't is that the high and the low represent support resistance. Most people think that the closing price represents support resistance, but it doesn't. Actually, what it does is the closing price represents the momentum. How you close at the end of that bar really matters. Some people think it doesn't, but it really does. If you close towards the bullish side, more towards the high side of the bar, now you have more bullish momentum. The higher you close to the higher part of the bar, the higher the momentum you have. If you close more towards the low part of the bar, the lower bullish momentum you have. So you're looking at this bar here, and what you're doing is you're determining where you close. So if you close bullish, okay, if you close bullish, this is the bullish bar, that's bullish momentum. But where you close in respect to the high of the bar also matters. The closer to the high, it's the stronger bullish momentum. And the same thing for bearish momentum is here, is this is a bearish bar, so this is bearish momentum. The closer you close to the low of that bar, then you now have a stronger bearish momentum. So closing price, believe it or not, dictates the momentum. It does not represent support resistance. And this is the reason why a lot of times the moving average indicators are delayed. A lot of people use the moving average indicators, specifically the 10, the 30, the 50, 200, and so forth, as support resistance indicators, but they really don't represent true support resistance at all. And the reason why is the moving average indicators are based on closing price. So it's delayed. And using an indicator that's delayed is not a good scenario from the money manager perspective. And the reason why is that you give up a lot of the profits before you enter the trade, which is not good at all. Okay, so this is here over here. Does anyone have any particular questions in regards to this? No? You could open up your mic, or you could ask in the chat room, whichever one you prefer. Okay, so let's continue. Okay, so again, here we talk about momentum here. You could see that this is bullish momentum here when the bar closes bullish, bearish momentum when the bar closes bearish, and so forth. Okay, now we're going to redefine momentum, because in order for you to trade, it cannot be subjective. Okay, it can't be subjective at all. So me telling you that the closer the price is to the high part of the bar, the stronger momentum and everything is very subjective. So you can't really use something that's subjective in trading. If you do, you're gambling and you're not trading probabilities. So what we're going to do is we're going to define momentum differently now. So even though the bar is closed bullish, we need to sit there and quantify what is momentum. So what we're going to look at is where this bar closes in respect to the previous bar. So if this bar here closes above the previous bar, now we're going to say this is a bullish momentum. Okay? If you look at this here in various different scenarios, the first example here to your left, the bar here, the current bar closed above the previous bar high, so this is bullish momentum. If this bar here closes below the previous bar low, that's bearish momentum. If in this example here, the current bar here closed here, it closed above the previous bar low, so it's stuck between the high and low. So at this point, we're going to define this as no momentum at all. And the same relies for the bullish side here. If we close here between the high and low, this is no momentum. So this is how we're going to define momentum. This is how you could determine if there's games being played or not, believe it or not. If you have a bullish momentum, this bar is real. If this is a bearish momentum, this bar is real. If this bar here does not close above the previous bar high or low, this is what we call a fake bar. They played games with you. And this bar really should not matter in your calculations, in your thought process and trading and so forth. And neither should this one here. So if you look at a chart and you remove all these fake bars, you really could determine what's going on with the trend. Whereas if you keep all these junk bars there, it's going to actually control how you think, which is not good at all. Okay. So there's a question, how do you know support resistance will hold? We'll talk about that in just a moment. We're going to get there in just a minute. Okay. So is there any questions in regards to real bars versus fake bars? Real bars are where you have a bullish momentum, a bearish momentum, where you basically close above the previous bar high or you close below the previous bar low. If you don't do that, that bar is fake and it really does not matter at all. Okay? No questions? Okay. So now, let's talk about support resistance. Oops. Okay, so we define now what momentum is. So when we define momentum, we're looking at the current bar and comparing the closing price to the previous bar. Okay, and as we said, if it closes above or below the previous bar, then it's a real bar and you have either bullish or bearish momentum. Let's take that thought process now and take it to another level. Okay, so if you get two real bullish bars in a row, that now what happens is the low of the first bar, it acts as a support. If you have two real bearish bars in a row, the high of the first bar acts as a resistance. So this is how we're going to define support resistance. And we have to quantify that. Reason why is you can't look at every bar and determine and say the high of that bar is a support or the low of that bar is a resistance at all. You have to come up with something. So what we did was we defined what momentum is, determine which bars are real and fake, and now we're determining what the support resistances are based on the real bars. Any questions in regards to that? Okay. So now let's take a look at gold. Okay. So this is XAU USD on the weekly time frame. Okay. And ignore the title at the top, that's wrong. Okay. So here you're going to see, and what I've done is I recolored my charts here. Okay. So on my charts here, if the bar did not close above the previous bar high and low, it's not colored. If the bar is colored, such as this green one here, this means it closed above the previous bar high. If the bar is colored red, it closed below the previous bar low. So if you look at the colored bars here, you can really see what's really going on behind the scenes. Okay. And if you don't look at these bars that have no colors at all, you could see that it's a lot of games being played. So what you're looking for is typically over here, you could see here, there's a bullish bar here, there's two of them there. When you get the second bar right here, right there, now you know that basically the first bar here is a support. So if you keep on going down this method here, you're going to see that these supports there. So let me take my drawing tool. So if you look here, this is the first two bars here. So these are first two real bars after you had a real bearish bar. So this now tells you that the low of this bar right here is a support. Then you got another two, and this keeps on going up, 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 up. Then you got a real bearish bar. Notice you never got another real bearish bar at all. If you did, that would start a bearish trend. You didn't at all. You got a bullish bar, and then you got another bullish bar. So now what happens is the trend is continuing here, and the support is over here. So you could keep on going here. Now you see a bearish bar here. If this bar was bearish, now this could go for profit taking. So this is bullish state right now until you get two real bearish bars. So you could see here when you should start preparing for a profit taking scenario. So on this day right here, I would be looking to see what would happen. If this bar here had turned out to be bearish, now I know that profit taking is going to happen and gold could come down. It didn't. It gave me a fake bar. They were playing games. Over here, I got another real bearish bar. I'm looking for two bearish bars in a row to tell me that this bullish trend is over, or I'm looking for two bullish bars in a row to tell me that it's going to continue to go up. So I have a bearish bar here. I was looking for a bearish bar over here. It did not happen at all. So now I'm no longer bearish. Okay, I know I'm not going for profit taking. I got a bullish bar. If this here broken the high and closed above it, now the trend could continue. It didn't. So now we're still consolidating in a bullish consolidation pattern. Here, you could have started the trend again. It didn't do that. So we're still bullish consolidating. You have a bearish bar here. If you had another one, now this could start to go down. It didn't do that at all. We're consolidating, consolidating, consolidating. Here, a bullish bar. Next one should have been bullish. If it did, you start to go up. It didn't. Then you have a bearish bar. Now over here, I'm looking for a bearish bar. If so, profit taking, what happened? Didn't happen at all. Got a bullish bar here, right here. I broke the high and I closed above it. So now the trend starts to continue, and and the support is over here. So you could see here how real bars and fake bars are helping you to understand really what's going on. Does anyone have any questions on this? Because I kind of went through this a little fast. But can everyone see how you could see where the games are being played? And really what you should do is, once you get a real bar or a real bar, then you should start looking at the next bar for an opportunity. If you're bullish on gold, you're looking for one bullish bar, and then the next bar you look for, and you start setting up for a bullish bar on the next bar, and then if it breaks the high, now you're ready to go, and you got to make sure it closes above it. Does that make sense to everyone? So here, this is gold on a weekly time frame. You could easily see that gold here started the movement up here on December, at the end of December here, pretty much the beginning of 2025, and you could see it started going up. You could see there was no two bearish bars in a row at all. So this is maintaining a bullish state. It started a trend again here. So you had started the beginning of the trend right there, then it continued here, and it continued here again, then it entered a consolidation pattern here, and really didn't give you two real bearish bars at all, so it told you what didn't want to go down, and then here it continued to go up. Okay, so this basically told you if gold was going to continue to go up or if it was going to go for correction. And you could apply that today on the current chart too, and later on we'll do that. We'll go to a live chart, and we could go through some instruments that you want to look at and go from there. But by looking at the real bars and fake bars, you could determine where the games are being played, which are pretty much these fake bars here. And you got to have two real bullish bars in a row or two real bearish bars in a row. When you do, it gives you support resistances, and you want to make sure these support resistances are going up in sequence. Okay. Here's crude oil, and we'll start here from left to right, and we'll go from there. Okay, so here you have two real bearish bars in a row. So this is my resistance right there. Okay, that goes down here. Then I got a fake bar, bearish bar. Then I got a fake bar, bullish bar. Uh-oh. Now, if this hits there, breaks this high and closes real, where it closes above the previous bar high, this bearish trend, it could be over because it's going to go for profit taking. It didn't do that at all. In fact, next bar here, went bearish, two bearish bars in a row, resistance moved to here, right there. Then it had a bullish bar, never confirmed it here, okay? And then it continued to go down. Now I got a bullish bar over here, right here. This now decided to go up, okay? So now I have a resist support here, right there, and this now is confirmed with this bar here. So now I have a bullish trend here. The bearish trend has ended. And notice one thing, my support is here, okay? Over here, this was my resistance right here. So this stopped exactly at my resistance, which is that line right there, which is the high of that bar right there. It stopped right there, kind of consolidated, didn't keep on going up at all. Then over here, now I have a second support here, okay? And this support is above that resistance here that was created. So this tells you the profit taking is over. So when you have a support that gets above that last resistance, it tells you that profit taking is over and now a new trend has started. So this has started a trend here. You can see a bearish trend here, develop here, didn't go much at all. Then more games are being played, more games being played. There's a support here, right there, and play it back and forth, back and forth. So you could see the games being played, and in this scenario here, you went up for a little while, and then you came down, and so forth. And you could kind of see what's going on here. Sometimes you get into these fake scenarios where you get two bearish bars here, then all of a sudden it ends and starts to go the other way. And what you could do is you could clean up these type of scenarios by doing multiple time frame analysis, where you do this method on a higher time frame and then look on the lower time frame so the scenario to go into your direction of higher, which I'll show you how to do in a minute. Is it best to draw lines on the body of the candle or the wicks? The support resistance is always drawn on the wicks, the highs and lows, okay? You can't really use the body of the candle. Reason the body of the candle represents the closing price and the opening, which is more towards the momentum. Okay. So let me erase this. Okay. Notice this is a 4-hour chart on crude oil. Okay. So you'll get some variations like this where it comes down, says it's a bearish trend starting, but notice one thing, there's a resistance here. The last support was over here. So this is profit taking here until you get a resistance that breaks the last support. So what you always want to do is, if you change directions all of a sudden, okay, like here, this was bullish, and the last support was over here, right here. Let me draw this. So the last support was over here, right there. Then all of a sudden you change direction. This is a resistance here. The key is that the price is still above the last support. So even though you're going down, this is profit taking for this upward movement here. The only time you're going to start a trend is when you break this last support that you ran into. Everyone good? Okay. So now, we defined momentum and we defined basically support resistance. So in momentum, we defined what real bars and fake bars were. And real bars are pretty much where they close, the current bar closes above the previous bar, high or low. Those are the bars that matter. All the other bars don't at all. Then what we did was we said that if you get two bullish bars in a row or two bearish real bars in a row, that sets up a support resistance with the first bar. So we defined support resistances based on real bars. Now what we're going to do is we're going to establish what a trend is based on real bars. So everything we've done is around real bars versus fake bar concept. Okay, so in here we're defining this here so that if you get two real bullish bars in a row, it basically means now you have a trend. If you have two real bearish bars in a row, that means you have a bearish trend. Ideally, if you could get to three, that's the best. But if you get to two, as you saw in the previous example, you could get caught up in profit taking. So I really like to look for three real bullish bars in a row or three bearish bars in a row. If you get that, now you've got a very, very strong trend going forward. Any questions in regards to this? No? Okay. So this is the S&P 500 futures. Here's an example here. This is a weekly time frame. You had two real bullish bars in a row. You quite didn't get the third one, so now you're going to get caught up in not starting a trend here. And it went for profit taking. You could see eventually went for consolidation, and then you could see there. Here you could see here. Here you had three bearish bars in a row. It started the market correction really, really well. Over here you got two, then a fake bar, and then a real bar, and so forth. So you only had two in this scenario here, but it did start a trend to go up. So there's going to be some scenarios where two real bars in a row will start trend. There's going to be some scenarios where basically you want three and so forth. So this is a risk you have to take when you start looking at two real bars in a row versus three. Okay. So the way I look at it is that this over here, you could see over here, you had two real bearish bars in a row that kind of didn't lead into a trend. Over here, you had two real bullish bars in a row, didn't lead into a trend at all. So when you're looking for a brand new trend, you kind of want three, and you don't want to break the last real bar low at all. So here, you didn't get a real bar over here, and you're looking for a real bar as long as you don't break the second bar, real bar low. And in this scenario, you did, so at that point, it ended. Okay? Any questions? Nope. Okay, here's the gold here. You can see that you have three real bearish bars in a row here. And then you have three over here. When you have the three that are in a row, then it's going to start a very, very strong trend that's going to last a while. Okay? Over here you had two, but notice after the two, it maintained a second bar low. So even though it consolidated, you had some real bearish bar here, you still didn't break the second bar low. So price kept on going up and didn't try to reverse. So that was fine when you have these two in a row. Then you can see you have three here, and then you could see here you had two real bearish bars in a row, but that was just profit taking because the last support was over here. Okay, so this kept on going. You have three in a row here, which pretty much started the bearish trend for crude oil to go down And you could see here that literally went from $65 a barrel all the way down to 60. And you could see here that after here, you still don't have two real bullish bars in a row at all. So this is still in a bearish state. Okay. Any questions now? So just like in the previous workshops, we talk about how to optimize and everything. And the best way to do it is doing multiple time frame analysis. So what you do is you want to get the reward from the higher time frame, but enter on the lower time frame for your risk. So your risk is on the lower time frame and the reward is from the higher time frame. When you do that, you get a really, really good reward risk ratio. And that's exactly what I want to show you how to do that. So if you take the scenario that we went through right now, here is, this is your trading plan. You look for either 2 or 3 bullish bars in a row on the higher time frame, then you go to the lower time frame to look for bullish setup, and vice versa. So if you look over here on this box here, I had one real bearish bar right here. And if I got another one, I could go down. So on this week, this is a weekly time frame here, this week here, I'm going to go to a lower time frame and see if I have a bearish setup below the weekly low. If I have below that, the previous bar low here, and I have 2 real bearish bars in a row, now I could start a bearish trend. So I'm going to go down to the 1 hour. After I break the weekly low, this is when the second bar, weekly bar started. This is the weekly low right there. And now what I'm looking to do is on the 1 hour, I'm seeing if I get 2 real bearish bars in a row. I got 1 bearish bar right there. Actually, I got it right here. Let me erase this here. So when I broke that weekly low, I had a real bearish bar. I got another one here to start it, but that resistance would be up here, which is not really what I want. So over here, there's another real bearish bar. You could enter on this low right here, right there, and now it broke that low as real. So I have 2 real bearish bars in a row on a 1 hour, which now confirms that with high probability that the weekly would close with a bearish bar, which means now I have 2 real bearish bars in a row, and so it was confirmed with the 1 hour. So basically all I'm doing is when I have 1 real bearish bar or 1 real bullish bar, I'm going to mark off that low or high of that weekly or that bar, and then I'm going to go to the lower time frame and look for that same scenario. So if the previous bar was bearish, as soon as it breaks this bar low right here from the first one, I'm going to look for 2 bearish bars in a row. And if I get it, that means that this weekly bar has a high probability to be bearish. If I don't get it, then it's going to probably be bullish, and I'm not going to get the 2 weekly bearish bars. So I'm using multiple time frame analysis in order to confirm the second bar off the higher time frame. Any questions on that?
Yes.
Yes? Perfect.
Yes, you are good.
Okay, thank you. Okay. What instruments would you guys like to see? Anything in particular?
You can go ahead with this NASDAQ.
Okay, so if you look at the NASDAQ here, this is a 4-hour time frame here. And you could see here, you had a bullish state here with all these 3 bullish bars here. Then, oh, whoops, let me turn on the fake bars and real bars. So this is a regular chart, and if I color my charts here, now based on real bars and fake bars, you could see exactly what's going on. So you have a bullish trend here, one real bearish bar here. You look for this to break the low and close below it. It didn't do that at all. So it's still bullish. Then you have one real bearish bar here. Then this broke the low here. This started the NASDAQ going down. Does everyone see that? Yes? Then you have another two real bearish bars here. It tried to go up, but never gave us a real bullish bar. Then you have another bullish bar here. If you got another one here, this could have reversed. Didn't do that at all. You have one real bearish bar, still bearish trending here. And you don't really have two real bearish bars at all. So you keep on having these one real bearish bars and you don't have two in a row, which is not a good scenario. So eventually now you're consolidating. You have one real bullish bar, and today it's my 6 o'clock, which is your night here. Now are reversing here, where this now could go up. Does everyone see that? Yes. So this here, the last 4-hour bar confirmed now that we're in a bullish trending scenario. And now what you're looking for is where you've got the last two bearish right here that started a trend here. So this here could try to go up to here. If you get another real bullish bar right now on the current bar, we have to wait till it closes. Now you're really going to start a very strong trend, and it could actually come all the way up back up to here, which started the whole bullish trend. Does everyone see that? Yes? So if you look here, there's the NASDAQ right here. That's your resistance. And then here, you define a support right there. And the other resistance here is here. So this is where you have a high probability to get to right now with this bullish momentum. If you break this, now you could get up to here. So over here, this is where you would enter on the trade here, especially since it opened up, pulled back, and then broke the high. So you have drawdown here. So this has been a perfect place to enter on this. Okay, let's look at the current chart of gold. And what we'll do is we'll go to the daily chart. And you can see here, you had a big red bearish bar on the daily chart, never followed through with at all, okay? Then you had here and here, now you define a resistance right there, okay? And if you look at the support here, this started all the way up here. So you got past that one support right there, and there's another support here. So notice this started here, there's a support there. That started here, there's a support there. When this bearish trend started, it came straight to the support here and stopped. Does everyone see that? So you could see that this is a great way of finding support resistances, because notice one thing, it stopped exactly at this level here. It stopped, couldn't do the third real bearish bar at all to have a very strong trend. Then you have a bullish scenario here, where first bullish bar, second one got confirmed. Now you have a support here again. This is going up, try to go bearish, couldn't do that at all. So this is last state here is bullish. I mean, gold right now is bullish. If you get two bullish bars in a row, you could start to continue to go up to retest this high. Everyone good? If you look at it on the weekly time frame, you could see here that really, this is the week here, November 3rd. If gold was going to go down, this was the chance right here. It did not break the low at all, so this is starting to be bullish. And in fact, this week, if you break the weekly high, you're now going to have two bullish bars in a row to start the trend to come retest this high and to possibly break it. Everyone good? Yes? Not sure if you guys play Bitcoin, you could apply this on crypto too. And you can see here, last week, we got two real bearish bars in a row right there, which pretty much ended right here, everything. So you could see here, you have two bullish bars here, then Bitcoin gave you resistance here, right there. So you was down bearish, you never had two bullish bars here, never had two bullish bars here. So Bitcoin being bearish, then you had 1, 2, now that you got another resistance that developed here, right there. And if you look at the supports where it could go to, here's two bullish bars. This was the first support here, which it got to right there and kind of held. Now, if you look backwards, the next level that it could get to was here. It stopped there last week, and the question now is, are we going to break it or not? That's going to be the magical question. If we break it, and you look here, there's no real support until you get all the way to here, which is all the way down to 66. So in order for Bitcoin to hold, it's really, at the end of this week, it's got to be a fake bar, and it's got to hold this 93 level here. You guys see that? Okay. Is there any particular currency you guys want to look at? Let's just take the simple Euro USD.
Euro USD.
Okay, perfect. Let's go in there. Okay. So the last bullish state you have is here for the Euro USD, which is right there. Okay. Then you had a bearish state here with two real bearish bars. Notice you're not getting 3 anymore. So you have it here. Now look what you're doing. You're consolidating between the two ranges, and you're really not getting two real bullish bars or two real bearish bars to break these levels, are you? So this is pretty much your consolidation pattern, which is roughly around 300 pip range. You guys see that? So that's not right now much of a trade at all. Here this week, if you could look for a bullish scenario here to confirm two real bullish bars in a row, but you have to wait till it breaks the high to do that, and it's not doing that. Here's the one I'm looking at, okay? And this is the one I'm trading, and here's why. If you look at this here, this is being, last bullish state was here. You haven't had two real bearish bars at all. And notice one thing, you tried to have a bearish bar here, two of them couldn't do it. You've been holding this support for a very, very long time. I got a bullish bar here. You could trade it this week here too, or you could even trade it this week where here, and you could see here, it broke the high here. So if I come in here, broke the high there, and this is the weekly time frame, I could go to a lower time frame and look for confirmations. So I could go down to a 1 hour, and over here, as soon as I break the 1 hour right there, break the level, look for two real bullish bars. I got 1, 2. So now I got a support above there. This tells me with high probability that this is now going to go up. You guys see that? Because the 1 hour has a support above the weekly high, and that's exactly what I need. Is I need that there. And you can see here, if these bearish here, but never got 3 bearish real bars in a row at all. And if you look backwards here, the last time you got 3 bars in a row was here, and that's what caused us to break the weekly high. You guys see that? So if you're a conservative trader and want to get into the brand new trends, you could trade the three bars, the 3rd bar in a row, or if you're aggressive, you could trade the 2nd bar in a row. But these are the states that you really want to trade. The Euro USD was consolidating, so really there's not much there at all. You're not in a current state at all. You're in bullish, and then you have bearish. So you're just consolidating. So that's a pair that you're really not going to make much money there at all. So you need to find the pairs like this one here. The last state was bullish, and notice one thing right here is bullish. Now I got another bullish bar, and I could trade this week here going bullish. So these are things that you keep on trading bullish all the way up. You guys good? And if you look backwards, the last bearish 2 bars in a row on where this could stop is here. So this bullish state here is trying to get to that level right there. Does everyone see that? And if you look, if you just mark off every 2 bearish bars in a row, this was one right there, and that's it right there, and then here. So you could see here that once I broke this, there's high probability to get to here. So I'm targeting US yen 157.61, which I'm not far away from. Everyone good? Questions? Okay. So is there any other questions? We've gone for a lot. Again, here's the barcode for the Telegram chat room. Please join us in the Telegram chat room. Also share it with other people. If you have any questions, please don't hesitate to ask. Best way is always to post the chart and everything, and I can help you there. And I'll be posting more and more charts there this week, especially on the weekend, to kind of help you guys on which instruments to trade that week for the following week and so forth. But you basically, what you want to do is focus on the weekly, find the scenarios where the current state is like bullish, and then you have a real bullish bar last week, and now you're looking for another real bullish bar this week. And if you do it that way, and then go down to lower time frames and trade, you have a high probability of success. Okay. I think that's it, everyone. Thank you for your time, and I'll see you guys in the Telegram chat room.